What up, everybody? Lonnie here at Charts and Labs. We are gonna kick off these little mini lessons this week to try to get some education in as far as kind of some general crypto knowledge. That's not just specific to TXC, but that could help you with TXC and other projects that you might be looking at getting into. Getting that familiarity gets you comfortable with what you got and allows you to utilize it properly. Because that's the best boost in value to these projects is once you're able to use them, how do you use them kind of thing. So one of the first things that we're going to kick off and talk about is wallets, hot and cold wallets. And you have you have I also want to talk about wrap tokens. This was a suggested topic from one of our peer members. And so with TXC, everybody got a cold wallet, right? And that's what kind of started, and that's where your daily mining coins were deposited. A cold wallet is a physical wallet that is off network, so it is the most secure of the two options. When a wallet is deemed hot, it means it is connected to the network, so that bridge is a two-way traffic flow. It's not that it suddenly becomes unsecure, but being connected means that there's more access to it. And by having more access to it, just means that it's susceptible to things a lot easier than what would be on a cold wallet that doesn't have that constant traffic flow as like a toll bridge kind of thing. So the best way to think about this is like a wallet it isn't what's actually holding your crypto because your crypto is still technically on the blockchain. The money does the crypto doesn't leave the blockchain. Your wallet is basically like your login and your access to that crypto that is yours. The private key, which is your password and access to your wallet, is what proves the ownership of that crypto to the blockchain so that you have it. Um, so let's talk specifically about a hot wallet. This is connected to the network, so it's constant. These are mobile wallets, browser wallets, exchange wallets. So whether you're on Pionex or Coinbase or Kraken, any of those wallets or accounts on those are considered hot wallets. They're the same thing. Any kind of web wallet or like MetaMask or any of these other wallets, even though they have built-in security features, technically they are connected to where you can constantly move and deposits in and out, thus making it a hot wallet. So these are a lot easier to use. They provide those faster transactions and exchanges. So this is like for trading or for daily activity and daily use. But again, because they're connected to the network, that makes them a little bit more vulnerable. So if you're sitting on something that you're looking at wanting to make sure that it's the most protected, you want the wallet that's storing it to be a cold wallet. Cold wallet is a physical wallet or a hardware wallet that is not it's capable of holding because your crypto is on the blockchain technically. It's holding that access to that allotted amount of crypto, but there's no steady stream. So these are those physical hard wallets that you see, or a coin, which is kind of cool how TXC and Bobby's made those. These are your most secure. They're not exposed to the internet. That doorway is locked. So this is something that if you're going to use long term or try to pick up and accumulate and hold on to it and you want to protect it, keep it in a cold wallet because you can't use it daily. But once a wallet, like especially any of these wallets that start cold, like TXCs that then become hot, once that's connected, you can't turn it off. It's always going to be there. So hot wallets are your usability, speed focused, easier transaction, easier to use in and out. The door's open. Cold wallet, high security, but you don't have any access to it. Direct access. It takes an extra step or two to convert. So the more the idea, or I guess the conversion is if it's the more access you have to it, the less secure it is. The more secure it is, the less access even you have to it. So when you look at all these cryptos and all these tokens and projects. Um, so they all have their own blockchain type design, and cold wallets being hardware have to be programmed to be able to store and have that access. So that's why, like TXE, for example, has its coin that can hold, it is designed to hold as a cold storage. But like Tangem and these other hardware wallets that are out there, they're not, they don't have the capability of holding TXE. So one use case that creates that accessibility to be able to use these and have more fluidity and stuff is where you wrap tokens. So Ethereum is highly usable. So a lot of people will wrap on the Ethereum network or use Ethereum to wrap it. So basically, you're coding your TXE token, the native token. That native token can't code across to a cold wallet. But if you wrap it in and make it a WTXE, which is a Ethereum disguised TXE essentially, well, then you can send that on anything that any network that Ethereum has access to. So it can pass those toll bridges with access to those cold wallets. So if you're looking for a physical cold wallet that you want to be able to store your TXE, you have to do the wrapped TXE version. Because not all the blockchains naturally communicate to all of those hardwares. So yeah, when you're wrapping a token, you're basically disguising it as a more usable uh, crypto, which is like almost all of them are Ethereum, and that gives you that cross-chain utility and easier liquidity and fluidity and use for it makes it more compatible because Ethereum has special use cases. Like one for example would be like a smart contract and automation. So if you wrap your TXE to look like Ethereum, well, then you get all the benefits of Ethereum with your TXE. So, uh, yeah, that's basically that. Just making sure going through my notes, make sure I didn't miss anything I wanted to touch on. Yeah, the wallets are not necessarily about their wallets are control, not necessarily storage. It's not like a wallet that you put in your pocket that's holding the dollars. Your wallet is basically your login or your key to get access to it. The private key is your password, so that only you have the ability to use it. The blockchain is where everything is at still. So let's make sure before I go any farther, does anybody have any questions they want to ask about the wallets, hot wallet, cold wallet, wrapped coins, anything at all? I take a gander at the price action that we got going on lately. Let's see. And share my screen before I forget to do that. All right, we'll throw in a little bit of market time to kind of get a filler in. Most of these lessons I'm going to do Monday, Wednesday are going to probably only be 10 to 20 minutes. They'll be much quicker. Some topics might be longer, like a 30-minute topic. But the biggest thing I want to do is give access to people to be able to ask questions that they want. Maybe I can't answer it directly in a message and type it out, and they just want to hear somebody answer their question, or they just want to be able to have that connection to know that people are still here and working on the project. So what we got here is on tradingview.com. I'm using, this is Bitmart's exchange data. Bitmart is TXC's largest exchange. As far as volume goes, sometimes DexTrade gets in there a little bit because DexTrade is the first one. So there's a lot of people who have that familiarity with it and stick with it. Um, but these are just some levels that I've kind of thrown on there. They're not really precise. So let's go through and we're going to remove all of these and just kind of do a little rundown on how you see trends and zones in these chart patterns. So we're going to throw on a little ray. Doing the ray is one, you're plotting two dots, and on the last dot, it's going to extend that zone to kind of show you a possible trend. So as we're looking kind of like this whole gap shows it's a downtrend, but we could see that even though these wicks jumped up above, for the most part, the tops of these candles were obviously held by a resistance point. So we plot that one and plot the top of this one. We can see this develops a little bit of a channel, and we could even go back to the bottom of this one, line up with the bottom of that one, and we'll come here. And I always look for a validation in these channels is how parallel these lines run to each other. Algorithmically, this is just how markets kind of flow. Is they have a lot of there's algorithmic patterns that you'll find where you'll see. That's why like a lot of people use Fibonacci levels, which is this that'll automatically plot from the top down to the bottom, and that's because these algorithms typically follow patterns of sorts. Human nature, there's psychological numbers where like the 5, 10, 15, 20, 25, anything that ends in a 5 or a 0 psychologically in people's heads triggers a reaction to either buy or sell. So those naturally come in. But as far as the computer programming side, where people are using bots or just order flow, um, that whether it's the market maker or these arbitrage exchanges or people who are actively trading that are using these softwares on their own, um, you'll see that just follow patterns like this. And the Fibonacci is one that's through life is in everything. You'll find Fibonacci sequences um, is very common. So when you do this from a high to a low, you can see that each one of these horizontal lines kind of lines up with where we see some support and resistance. This one's a little bit off, but you can see this blue line right here at 20 cent or 0.20729. You can see that we followed that line and stayed there. A lot of touch points. The more touch points you see on a whether it's a support or resistance line or a trend line will be more validating. So you'll always see the look at that, and more touch points, the more true, I guess you could say it is. So let's throw a line on that one. We're gonna make these horizontal lines all blue just so we can see them. I always like to do on certain programs, you'll see they'll do these Fibonacci a little bit different. On TradingView, they do this shaded areas and colors. And for the most part, I don't like that because it clouds the being able to see it. But I can add my lines to where these lines are. So this one I'm kind of focusing on in this 18933 zone because this big wick down and bounced off of it, and it kind of it's close to that, and then we see this little tiny little L out. So there's a little bit of some multi-touch and some interest there. So I'm gonna throw that line on that one. I'm going to say that that's it for what I'm going to use off that. So I could delete that. And then I have this nice horizontal channel, and I have this descending channel that we're looking at. So this zone, once price kind of recovers, should see uh, some resistance in here, but getting above. So you'll see, price should curl up, should see some resistance here. Getting above that makes this now support. Likely we'll see a little bit of resistance in here, depending where it hits. If it comes up quicker, it's going to be up here. If it takes longer, it could be down here. Clearing that and getting into this channel suddenly creates that support on the bottom, resistance on the top. And same thing, breaking above this line then makes this one become support, and then we're moving to this zone up here back into the 20 cent zone. So yeah, we had a little bit of a sell-off, lost some momentum. We had momentum going, um, and just kind of fizzled out. So uh, waiting for some exciting news. I'm guessing people are on edge, and there's stuff out there. Just wanting to see it, I guess. Maybe seeing is believing. So we see this wick and this wick right here kind of came up to that 21.7. To make that one be a little bit lighter because that is going to be the greener pasture candle. So yeah, as you see this, whenever you're trading or as you're kind of investing in any of these, and this follows across with everything, not just TXC. But you look for these large wicks down will always kind of show you where support is. And just like a large wick up will show you where resistance is. And if you plot those lines, you can see where the value of buying has more upside than downside. When you're on this line, you're seeing support being built. It's a little bit more indecisive, and maybe you're holding for a move to wait and create, waiting for somebody else. Maybe you're like, oh, this is nice. 18.9 is showing support. I'm ready to buy now because I'm looking for the next move up. Um, so just some lines to look at. I know once you start throwing a ton of lines on these charts and such, it can get really complicated and really overwhelming. So keep it simple. The best thing that I can tell you is when you're looking at ones that have thinner liquidity, lower volume and less activity, like a startup project such as TXC, you don't want to go into these shorter candle timeframes because it gets really, really jumpy back and forth. Um, you kind of do like a 15 minute is a good one to get a good direction of kind of what's short term, but you always want to kind of zoom out and look at more longer term. So like a 4 hour one is much more deciding in where levels could be coming. So we're obviously 55 cents would be great, 35 cents, and you can just see where these bounce. And the more times it touches, the more confirming it is as far as support. So anytime it's on the way, we're below it, going up, you're looking at resistance. As soon as we clear it, break through it, once we're above it, it becomes support. So those are just ways to kind of know where you're safer to buy and safer to sell at, and to create that constant flow. Biggest thing I tell everybody when they're asking is, as far as buy and hold and diamond hands and all that stuff, the better for thin liquidity is the constant buying and selling. So if you buy it at 18 cents or at 20 cents, placing a sell in the profit that you're comfortable with taking, whether it's 2% or 5% or 10%, creating that circulating flow allows the action to happen. And for people who have bigger piles that would be looking at possibly coming into a project like this, especially a long term, they want to see liquidity, and they don't want to see, kind of a blaring weakness on TXC's market strength is this plus or minus 2% depth on CoinMarketCap. If you go to coinmarketcap.com, this will show you all of the exchanges, minus a couple that it hasn't updated on and showing. But you're going to see all the exchanges that you can go on and do TXC. There's also WeX, and there's also WeBot, and then there's also CoinStore.com. WeBot is the Pinex US version, and just they're not updating it properly yet. But this plus or minus 2% depth that we're talking about is the amount of money that it would take to move the price on that exchange 2% up or down. So $420 will move the price up 2% on a single order. So these smaller numbers means that it's very reactive to not a whole lot of volume and stuff. So if you look at like Ethereum, one of the bigger projects, and we zoom down and we look and we can actually filter by this, you could see how much money it takes. It takes millions of dollars on a single exchange to move it 2%. So that's why, like, when you go in, when you're wanting to come in with money and put it in Ethereum and you can place an order, you're not gonna spike the price and then instantly be down on it. And that's what bigger crypto bros, the bigger investors, the bigger people that could be coming into an exchange are looking for. So by uh, having those orders on the books creates a larger plus or minus 2% depth where people can come in and actually buy the coins and not spike the price. So that's where, Bobby said it on a couple of Zooms, and that's where a lot of people are talking um, about the participation in the market as far as placing the coins, buying them and selling them both. As much as buying them helps, buying and selling also helps. Um, and that is ways to participate. Let's also go look at some other ways to participate. And you can go to X. Crypto communities value um, X the most. It's just as far as a project like cryptocurrency, as far as mobile games, as far as like certain websites, blogs, and all that stuff. Communities are a good way to tell the size and the reach and scope of the project. Well, for cryptocurrencies, the biggest way to gauge its participating members in its community is on X, and CoinMarketCap uses that. So CoinMarketCap has this comment section and this that you can kind of comment and create a community sentiment through CoinMarketCap. But beyond that, it actually ranks the socials right here. It keeps track of socials and you can go to them. So you can go to the X, and when you're on this, CoinMarketCap actually browses and verifies the amount of participation. So when you look and you see 22, 22, 12, 30, 36, 25. This is very, very low community participation. 323 people have seen it, but only 28 people liked it. 658 people have seen it, only 52 people have liked it, and 14 people reshared it. 5 people have commented. This is small engagement factors, and literally all you have to do is come on to if you have a social media, if you have an X, all you have to do is come on and throw a heart on the post. I'm gonna see if I've done all of them or if I've missed one. Scrolling down. But a lot of good posts are coming out. The PR team is doing a very good job of keeping these socials up and active, and some really quality posts, and some good articles have came out. Some good blogs have came out, showing how TXC is good crypto, and crypto is good currency. That's a big mission statement. 2.3 thousand people seen this and only 47 have liked it. 10 reshared it, 3 commented on it. There's Melissa sharing some information. She has a great boot camp on crypto. Very, very wise educator for the crypto space. She was doing a little video talking about some things. Another one for Melissa. Let's see. I guess I've been doing good liking them all. Didn't miss. Look at me go, making sure I'm doing my part. So yeah, those are some ways that you can participate. Very easy. Doesn't cost you any money. You don't have to put any money into it if you don't want to, but just engaging in the community on X, on CoinMarketCap. And if you do value the project and you do think that it's more likely to go above 18 cents, putting some money and creating that volume on the exchanges is going to do well in the perception that there are active people who are engaging in it on these exchanges, and for both for like CoinMarketCap and these other communities that verify these projects and rank these projects, but also for potential people who would want to come in and also participate. So there's a little market rundown on top of it. We kind of double dipped. But the big one I wanted to get onto was just kind of break down a little bit into the wallet world and make sure that people understood what they have as far as that cold wallet that TXC sent you. That is safe. It's off network, holding the access to your um, mind allocated coins, and you can always send to that portion. From an exchange, you can send to a cold wallet, and it can receive them. But as soon as you open up that access and send from the cold portion to an exchange, to a hot wallet, or to anybody, then that portion becomes connected, and it's no longer cold and it's no longer as secure. So there's something to be mindful of. Cold is safe and hot is fluid, if that makes sense. So one last ask for questions. Anybody has anything that they want to ask and get on? Maybe a comment for a suggestion for Wednesday's lesson. I have a couple people have been sending me that I'm excited to jump into and get some people, uh, you know, engaged and comfortable with not just TXC but with crypto. I think there is definitely an obvious pivot to banks and our financial system shifting towards a digital currency, and crypto is designed to be um, that venue. So I think it's one of the things kind of like the internet. People didn't want to all partake in the internet, and the ones that did not learn it fell behind. So I think it's wise that we try to learn and make sure we have a good understanding of crypto as I think it's coming. I'm pretty confident that it's the next frontier for the financial system. So good deal. All right, guys, I appreciate you joining me. I'll catch you guys Wednesday and then Friday as well. Friday will be much deeper and into the market side and actually participating in the market as far as placing orders, buying orders, and doing all that. So that'll be Fridays. I'll keep doing that. That's the payday series. But right now, Mondays and Wednesdays, I'm going to try to do these little mini ones. They probably all won't be a half hour long. Some might be shorter, some might be longer, but any topic that you want, throw it at me and we'll get it covered. So, till next time, guys, have a good day.